All right, I've welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street for Main Street. If you've not done so already, please like, comment, subscribe to the channel. Come find Jason on Patreon. Best deal in the macro space, only $5 a month, tons of value. Come find me on carnivoretrades.com if you're interested in swing trading. You know, this is a tough market. SPX down now over 11% year to date. At Carnivore, we're swing trading and we're up over 8% year to date. We even took a couple of stop outs today, but we also booked 3 winners this week. So if you're an active trader, there's no better time to take advantage of that free trial. Anyways, let's get into it. So total bloodbath Thursday and Friday. You can see on the spiders here, SPY, kind of put in this bear base here really over the last 2 weeks. And if we actually look on the futures, you can see it a little bit better here. So it's the E-mini. So here's this red bar here, and you're just, we call this an inside bar, bearish inside bar. Price action just chops inside of that. And you can see on Thursday, we tried to break above that. So here's the high. We tried to break above that in the morning. And then the institutions and the banks really just initiated sell programs, and we really just sold straight off from there. So if we take a look on the spiders intraday, I want to show you this. This is how you can tell that it's algorithmic. So you see this is normal market, up, down, up, down, up, down. You get good bounces, you get good sell-offs, you get good bounces, sell-offs. We gap up here, and then it's just in a straight line. And there's no bounces, and it's very controlled. You can tell this is computerized, and there wasn't a whole lot of volume Thursday either. It wasn't like panic selling. And on Friday, we did get a pretty good volume on the sell-off, but a lot of it came in the last 10 minutes. So we had that big surge right there in the last 10 minutes that added about, almost 20 million shares to the total trading volume of the day. And you could tell this, basically the big boy said, hey, we need to unload some things. We're not trying to panic the market and cause them, even though they did cause a major sell-off. They're not trying to crash the market by doing it, and you just get that kind of controlled straight line selling that took place over the course of 2 days. Now, obviously, I was looking for a little bit more. So we had this move up, and we pulled back here. And I was looking for one more move up here before this type of selling action took place. So I was looking for selling. You guys know that I've been, said months ago, back in late 2021, I expect 2022 to be a bear year. We were short the market in late December into early January, and it's been choppy since then. So we've been expecting a bear year, but I was still expecting one more good move up here into April. April is typically a very bullish month. It's almost always a bullish month. And, a lot of the times after a big sell-off, you can get a good up move and then a little bit follow through, but we just never got the follow through on the pullback. So obviously that wasn't the case. And this market got absolutely dumped the last 2 days. So I'm going to go over the negatives here, all the negatives that I see really in the market. And then at the end, I'll get to the positives and see what we can talk about there. But here's the main negatives here. So semiconductors, you guys know I follow the semiconductors very closely. As is a leading industry group. So the big negative here is you lost this reversal bar low on a weekly closing basis. So that is a very bearish indicator. Now you're still basically holding the 100 moving average, but this moving average to me is kind of minor at this point. The bigger story is that you lost good volume here on this reversal bar, and you lost that on a weekly close. So that is a big negative here. Let's take a look at the Russell 2000. You guys know I've been talking about this pattern here. So again, we talked about that inside bar bear pattern on the spiders a minute ago. Well, what kind of pattern is this? Sharp move down, big red bar, and guess what? You're inside of that. So Russell 2000, not a good look on the weekly. And the monthly also confirms this. So, another big red bar, and you're inside of that, possibly consolidating and building a bear base there. So the Russell has been weak, and when the Russell is weak, it means that money is not flowing into risk assets. Remember, small caps make up the Russell 2000, so more of a risk on asset. XLF here, financials, losing this green bar low. So this reversal low here, which coincides with the same one I just showed you on the semis, that got closed below today. They had a chance to save it close to 4 o'clock. If you look on the intraday here, You know, it looked like they had a chance to rally it back up. They had a chance to rally it back up, and it got rejected, and we closed below it. The slight positive here is that you're above this pivot, but that is not a good sign there. So we do not want to see that on financials. Same thing on the broker dealers. This is another financial sector here. Losing that green bar low again above this pivot, but not a good look. Let's see, another negative is high yield debt. So we've been following this recently, and I've been talking about this pretty much every single week. And here's the level that I've really been giving out to you guys here. So 79.88, which is this bar low here, that's where you started to reverse, and you're able to bounce. We got below that last week, but we didn't close below it. This week we closed below it on a weekly closing basis. That is a major, major, major negative. Now, yes, there is, some kind of chop. There's a big green bar here. There's lots of, you can make a case there's lots of weekly support down here, but whenever I see any asset close below a wide range bar or above a wide range bar, if we're looking at a bearish wide range bar, it always is a signal of weakness. It's just never ever a good sign. So HYG, in a very precarious position. Another sort of, this is a bit of a different kind of negative here, but so the Dow here, we're looking at the Dow Diamond. It lost this, had this consolidation going on, and it broke below that, broke below all 4 moving averages. Now, it's still not the worst pattern if you look on the weekly. This isn't a terrible, I can clean up these lines here. This isn't a terrible weekly pattern here, a nice move, and this is the opposite. So this would be a bullish inside bar, but you also potentially had a failed breakout. The reason I bring this up is, I've said this here in this video many times, the Dow right now is the strongest of the 4 major indices. That's not a bullish indicator. You want to see the NASDAQ or the Russell leading. The Dow is made up of consumer goods names, Procter & Gamble, Coca-Cola, Pepsi, these types of names, Amgen, safety plays, boring names that people park their money in. Church and Dwight, those types of names, consumer goods names are doing well. Recession stocks, right? So when the Dow leads and it's via trend, meaning that it's happening often, that is generally not a good sign. And you're seeing the NASDAQ being sold and the Russell being sold and the Dow leading. That means that big money is parking their money in dividend payers in safe names. So that is not a good sign. Another negative here is the KRE here. Just in a very weak technical position, hasn't broken through this yet. This is regional banks, by the way. So much like the XLF, but you also have a break of this trend line here, which, is a head and shoulder pattern. So here's your shoulder, head, shoulder. You retested it here, tried to break back above it, couldn't close it on a weekly basis. So this thing could be going a lot lower. So there are a lot of very, very compelling reasons why this market can be headed lower. And this is not something that is surprising to me at all. Again, I was very adamant that this year would be a bear year. Essentially, the only surprise here is that usually April you get some type of a lift. And, I think personally the selling's coming a little bit early. But you got to respect price action. Price action is king. Anyways, let's move on to a few other things here. So let's look at rates. So 10-year basically flattish on Friday, but, essentially just kind of sideways to up all week long. It did get up to 2.97%, I believe, Wednesday night in the overnight. Did not do it during market hours, so it did it in the Asian session, I believe. But I still think it needs to go up there and tag 3%. Before it can really, rates are really overbought. And this is another thing I told you guys about. I said, the 2022 go long rates in short tech. And that has been the play all year long. Now, I think rates are getting really long in the tooth and they need to pull back here. And they're probably very close to some type of a top here. If you take a look at the 30-year, did actually get above 3% on Monday. Make that Tuesday. But did pull back off the highs. But, rates are strong. They're in an uptrend. They are overbought, meaning bonds are oversold. So I think that there is going to be some type of a rally here in bonds. But that's not necessarily good for stocks. So just keep that in mind. Let's move on here to energy. So crude, a really quiet week considering all the fireworks that happened in the equity markets. The one thing I'll point out here is you have potentially lower highs here on spot crude with equal lows. And I know I've said that crude probably needs to go down. At least I have the bias here that I mean, I think crude has a higher trading range right now, but I still think it does need to correct down to maybe 85 or so, 80 to 85. And, basically it just got really overbought really quickly, but it has a lot of support right here. That 50-week moving average, you've got this pivot high here. There's a lot of support in that range. I'd probably be buying it myself at that area. However, again, just like we said here, take a look at this. So this is a big bullish inside bar here. So there is also a chance that crude can move up. But daily chart, you do have lower highs, so we got to respect that with equal lows. So definitely respect that. But again, really a quiet week in crude, all things considered. We'll have to just wait on pattern for this. As far as energy stocks are concerned, so XLE, got kind of these trend lines on here, and I've been saying that these stocks are a little high on the hog, especially going into earnings. So look at Chevron, just really, really overbought here. Kind of just got really exhausted. This looks like buyer exhaustion here. You also have earnings coming up. So these stocks, they're very high on the hog, and a lot of their earnings are probably priced in for the quarter. So just keep that in mind. I'm not saying that to scare anybody or anything, but just keep these things in mind. And if the market does really start to sell off and we see acceleration to the downside, regardless of what fundamentals are going on, there will be margin selling, and that will filter through everything, right? So if you're down 20% on a name that you're over leveraged on, you're going to have to sell something that you're up on. So these stocks that are up are they're not impervious to major sell-offs is what I'm trying to say here. But OIH also kind of breaking this trend line here. So I mean, again, overbought. They need to correct, they need to pull back, but they're still strong. They're still in a strong technical position, and this is really the strongest sector out of all sectors in the S&P 500 so far. Let's look at Intrepid again. So I told you guys 125. That's what I've been saying the last 2 weeks. We got really close. Let's see. The high was 121.72. Very close, very close. It was just a generalization. I said 125. Got through 120 and then had a pretty steep sell-off again. Very overbought. So no surprise it had to pull back. Mosaic, I said 80 bucks, got just above 79, so 79.28 was the high, and now kind of pulling back in here. But again, still very strong names here are the potash stocks, but just very, very overbought. And uranium also was not impervious to the selling in energy. So CCJ coming way off the highs here. Denison, same kind of deal, breaking below those moving averages there. URNM took a hit as well. So really all energy got hit this past week, as did, let's take a look at, first let's look at nat gas, and we'll get over to gold here. But so nat gas getting all the way up to $8 and then coming back down into that 650 range. This does have some really good support in here short term. So this should get a bounce. It'll probably take it back up to about 750, and we'll have to see from there. So it's really kind of a similar setup that we had in September. Really strong move here, and then we call this a drop and pop setup. So move up, overbought, and then sell off into the 20 moving average. You usually get a bid off of that. So you should at least get back up to 750. But it will have support in that 630 range. Again, if the market gaps down on Monday, this could come down a little bit with it, so it may overshoot. But overall, again, nat gas is very strong, all things considered. All right, anyway, so let's get over to gold. So gold coming back in a little bit. Again, I told you guys 2000 was going to be a level. It got up there, tagged it. I believe I said 1994, 1994.80. So basically 2000 rounded up. Tried to get up there, pulled back off the highs, closed just below the 50-day moving average. Not too worried about that overall. The bigger concern right now is GDX. So GDX, again, I've been saying this is a little overbought. I said 42 bucks is going to be tough resistance. Didn't quite get there, but came pretty high off of the chart here. So all the way up to 42 and change, or excuse me, 41 and change, dropping down all the way below 37. So 36.94 is a close. So a pretty big, pretty steep fall. But again, look at how overbought it was. These types of moves are not atypical when you have, you go from 29 to 41 in a matter of 2 months. So this shouldn't be really a surprise here. It was overdue for a correction. Silver also, had a nice pullback here, tried to break out, and coming back in. So now it's got some support down here between the 200 and 100-day moving average. We'll see what it does next week. I'm a little disappointed with SILJ here. So this did kind of, and I told you guys it had to do a little bit more consolidation. I'm disappointed that it tried to push out or push higher so soon. I thought it needed to do a little bit more backing and filling, and I think it just got a little ahead of itself. That's why we got that failed breakout there. But again, support with the same area here, 200 average, 200 moving average, 100 moving average, right in that zone. Should get some type of a reaction off of that. But again, we'll have to see what we get next week. If there's a gap down, it could throw a wrench into everything. Platinum, with a pretty big steep sell-off on Friday with pretty heavy volume. I still think platinum needs to go lower. There's a much better level to buy it at, but it's not anywhere near here. And palladium actually held up pretty well. So kind of just inside of this green bar and chopping around. But palladium is just such a wild asset. It's very hard to get a gauge on it. Copper breaking below my area of 464 that we've been watching for a while. But all things considered on the weekly, you're still inside of this green bar. And you're above all 4 major moving averages, so it's not terrible. I mean, there's way worse things that you could be in right now. All right, so flipping over to Bitcoin, I want to show you something interesting here. So if we look at Bitcoin here, we've been talking about this red bar, this inside bar. If you notice, that kind of coincides with the spiders. So here's the SPX, and here's your down move, and you kind of just chop sideways inside of that. And then you got rejected. You tried to break out here and you failed. If we look at Bitcoin, it's the same exact pattern. So red bar, down, inside, tried to break out Thursday, and then that failed. So it's still above this pivot low here. But if it loses that, Bitcoin can get down to, these pivots in here around 37,000. And if it loses that, and you lose these levels, especially on a weekly closing basis, Bitcoin can go a lot lower. So, it does look like a failed breakout here. I mean, these inside bar patterns work out really well, especially when you break back above them and you get rejected and you close back below. So be very careful with the coins here. I think they want to go lower. It doesn't mean they can't get a bounce near term. This is a bearish pattern here on Ether as well. So be careful with the coins here. I wouldn't touch them at the moment. And I think they're telling us that this market wants to go lower. I've been saying the last couple of weeks and months really that the crypto market has been a really good leading indicator for risk overall as far as how it relates to the equity markets. Anyways, all right, so really quickly to wrap up here, let's go to the positives. So a couple of things you got here. Dow Transports, after losing that, after having that failed breakout there and losing this green bar, came down, you bounced, you did make a higher low, and you sold off Thursday, Friday like everything else did, but it's from a technical standpoint, the Dow Transports aren't in the worst position. You're below these moving averages, but it's way off the lows. You also have airliners, which have made a really good comeback. Here's the jets. So airline stocks have made a really good comeback. So that is a good positive. And if they make a higher low, they can still go up to 24, 25 bucks. So the airlines are actually surprisingly, I mean, they've been a dog for the last 12 to 18 months, but they've been holding up really well lately. See the jets here. Yeah, really the last year, just straight pullback pattern, but they've been holding up really well. You closed above this red bar high on a weekly basis, and they're outperforming the market right now ever since really March. So transports are finding their footing a little bit. So there's a little bit of a positive. The other positives are, if we go to the weekly, right? So the daily time frame looks like absolute garbage. But if we go to the weekly here, here's the weekly spiders. You're still, I mean, you moved up here and you pulled back, but you're still inside of this green bar. You're still, I mean, this still could be, technically speaking, a pullback pattern. And if you get a gap down Monday and a reversal throughout the week and close up Friday, I mean, that could end up causing a major short squeeze. The same thing with the triple Qs, still inside of this green bar. It could still, there's still room for it to reverse, is what I'm trying to say. Also, the Dow, we showed you this before, inside bar, it could also reverse as well. And the Russell, this is bearish, but as we talked about earlier, but you still closed above this green bar low. So technically, you're still above this reversal pivot. So the indices are still holding on. Okay. You also have another sector that's relatively strong here is IGV. So cloud stocks, it's still holding this green bar low. So it's not completely dead, but it's, it's not a good look any way you slice it or dice it. Um, Basically, you're running on hopium at this point. You know, there's a chance for XLF to make a higher low here. You did lose that green bar low, but on the monthly, you know, you could still potentially make a higher low. There's nothing to say you can at this point. You do have the 20-month moving average upsloping, so maybe you can get some juice off of that. There is a chance. Now, as far as the probabilities of that, so here's your other positive. Sentiment right now is super bearish. The IBD bull bear ratio just crossed over, so there's now more bears than bulls. Whenever that happens, it usually signals a low in the market. That signaled the last low, which was right here, right before the FOMC in March. And we made some good money off that in carnivore trades. It worked out really well for us. So that is a good indicator. Also, the AAII sentiment indicator is also still down below or at around 18, so very, very low bullish percentage. You also have the put call ratio. Let me just double check the exact number. I believe it's 1.28, 1.3 it closed at, which is basically the highest since the lows in January. So we have a very high put call ratio. You also have, if we take a look at the spiders here, I showed this to everyone earlier. Take a look at the 400 put expiring next month for May. 136,000 open interest, 53,000 contracts traded today, just Friday alone, on that put. So that means there's a lot of put protection being bought. We also had today, on Friday, was a 90% down day, meaning 90% of all stocks were down in the S&P. Usually these indicators mark a low. The one thing that I'll say that kind of negates that is stocks typically never bottom on a Friday. Usually when you have a bloodbath like this Thursday into Friday, you get some type of a follow through on Monday. Now we could have a gap down and then a reversal. That's possible. But it does look like stocks do need to test at least lower prices here in the near term. I think there's a good level of support around 423, 425. But, you know, if we get news over the weekend, there's nothing to say this doesn't gap down and flush. And this pivot right here at 410 has to hold on a weekly closing basis. If it doesn't, the market's going to go a lot lower. So just bear that in mind. Again, not trying to say this to scare anybody or, you know, be theatrical, but this is just the reality of where we are in the market. Anyways, guys, thanks for watching. Take care. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. You guys take care, and I'll talk to you all next week.